Hello, once again, this is Gretchen Bilayola to report some audit procedures. One of the audit procedures is to review rental revenue from land, buildings, and equipment owned by client and leased to others. When the auditor is in the process of testing revenue from rental of land, buildings, and equipment, he or she should account or consider for all available rental space and determine the premises actually occupied by leases and those which are vacant. The auditor can obtain the floor plan of the building as well as copies of all lease contracts. Rental revenue account should be analyzed in all cases and the amount compared with lease agreements and cash records. Another is to analyze repairs and maintenance account. Why there's a need to analyze repairs and maintenance account? This is to discover items that should have been capitalized. The auditor should examine and evaluate company policy regarding capitalization of extraordinary repairs and consistency in its application. The accuracy of the client's accounting for the expenditures may be verified by reference to vendors' invoices, to material requisition, and to labor time records. A comparison of the current repairs and maintenance charges with those of the prior year and with budgeted amounts could indicate errors in classifying repairs as capital expenditures. A material increase in repairs expense alternately suggests possible expense overstatement. Another audit procedure is to investigate status of property and equipment not in current use. Property and equipment not in current use should be investigated thoroughly to determine the properties for their future use in operations. Equipment and other property that have been dismantled or appear unsuitable for operating use in the future should be written down to their estimated net realizable value and excluded from the property and equipment classification. If plant assets are temporarily idle, they need not to be reclassified and depreciation may continue at normal rates. Last for my part is to test client's computation of depreciation. The auditor should evaluate the appropriateness of depreciation methods used by the client and then recalculate the depreciation charges on the test basis. Depreciation recorded on additions and disposal should be examined for consistency with company policy and the prior year. In the audit of companies operating properties subject to depletion, such as mines, timberlands, oil and gas deposits, and other natural resources, the auditor follow a pattern similar to that used in evaluating the provisions for depreciation expense and accumulated depreciation. They determine whether depletion has been recorded consistently and in accordance with generally accepted accounting principles. That ends my report. Thank you for watching. Once again, stay safe and God bless.